Welcome to the Friday edition of Tech Stocks Daily. Today we dive into the drama swirling around ASML Holding as a class action lawsuit looms large, cranking up the heat on the semiconductor giant. Google's entangled in a spicy DOJ antitrust saga, with whispers about parting ways with Chrome or Android creating shockwaves. Palantir's eyeing a flashy entrance to the Nasdaq 100, riding a growth surge, but watch that price tag, yikes. Meanwhile, MicroStrategy is giving us crypto-savvy thrills with its hefty Bitcoin stash, defying the odds like a stock market daredevil. Stick around for tech thrills, chills, and stock spillovers galore. All right, tech enthusiasts, today's juicy headline is all about ASML Holding. If you've been tuning in, you know ASML is a giant in the semiconductor game, owning the show with its photolithography systems that are essential for manufacturing those tiny chips that power our beloved gadgets. However, it's been a roller coaster of sorts for ASML and its investors lately, and here's the 411 on why this tech titan is making waves in the news today. First off, let's dive into the legal conundrum that's looming over ASML. Faruqi & Faruqi LLP, a prestigious securities law firm, has slapped ASML with a class action lawsuit. They claim that ASML's top brass may have pulled a Houdini act with their investor communications, allegedly concealing major hiccups in the semiconductor industry, especially around supplier issues and the pace of recovery in chip sales. It's kind of like selling a Tesla with no wheels, a bit of a critical component, right? Not surprisingly, when the third quarter earnings report was released on October 15th, 2024, it didn't sprinkle joy like confetti. The company announced a 53% drop in quarterly bookings and projected their 2025 figures to fall short of expectations, sending the stock nosediving by a hefty 16.26%. Grab your popcorn, because this drama has a deadline. Investors who suffered losses exceeding $100,000 have until January 13th, 2025 to step up as the lead plaintiff. Basically, lead plaintiffs hang out at the very front of this legal parade, representing everyone else who's disgruntled. Oh, but the plot thickens with some tantalizing options trading data. In a scenario fit for a Wall Street thriller, Benzinga's trusty options scanner picked up a flurry of activity around ASML's options, with high rollers making aggressive bearish and bullish plays. Translation: somebody knows something we mere mortals do not. Gamble at your own risk, folks. Let's break along those lines a bit. Out of 40 unique options trades snapped up by Benzinga, about 50% are bearish and 37% bullish, hinting at some serious mixed feelings toward ASML's immediate stock future. With projections guesstimating ASML stock to waver between 600 and 960s, it's akin to watching a soap opera where you can never quite tell who's knocking at the villain's door with a plot twist. Now, considering ASML's role as the fairy godmother of photolithography systems, their products are crucial. Major clients like TSMC, Samsung, and Intel depend on them to ramp up those transistor counts and churn out powerhouse chips. Remember, the crux of all this commotion is rooted in a swift and accurate evaluation of customer demand, which ASML apparently flunked. In conclusion, how ASML will navigate this blend of legal challenges and market speculations, only time will tell. Until then, they're playing a high-stakes game of chess, and all eyes are on the board. Stay tuned. All right, tech enthusiasts, let's dive into the spicy Google News stew of the day. It's been a bit of a roller coaster ride for Alphabet Inc., the parent company of Google, stuck in the antitrust funhouse. First up, Google is in hot water with the US Department of Justice. The DOJ is like the school hall monitor, telling Google they might need to walk back a bit and share search data with its search engine rivals. The real kicker? The DOJ suggested that Google should consider selling the Chrome browser and even the Android operating system to break what it sees as a search monopoly. Wow, someone's really trying to break up the band here. Now, Google's parent company, Alphabet, has long been on the hot seat for its massive chunk of the online search and advertising pie. Some argue that with great power comes great monopoly risk, and this whole situation is stirring up debates. While the DOJ has its eyes set on Chrome, a reader poll by Benzinga suggests folks don't see breaking up Alphabet as the best strategy. If the breakup happens, YouTube seems to be the fan-favorite piece folks would invest in if Alphabet is split, with Chrome not scoring much love. Analysts, on the other hand, think breaking up might not be the worst thing for investors. They'd stand to gain from potentially higher valuations. YouTube, if spun off, could turn sailors into captains by bringing in a valuation tidal wave estimated to be between $455 billion and $643 billion. But wait, there's more. Just as Google is trying to wrangle all the trouble stateside, it might have to brace itself for international headaches. The United Kingdom's Competition and Markets Authority is sharpening its proverbial magnifying glass to check out browser duopolies, with Google and Apple in the crosshairs. The UK watchdog is concerned that Apple's policies might be clipping the wings of innovation, especially for those developing in the progressive web app space. Allegedly, Apple and Google's cozy revenue-sharing deal acts as a fun little buffer from competition in mobile browsing on Apple devices. Fortunately, this has spared us humans from seeing an Apple versus Google bare-knuckle brawl for now. Moreover, Google and Apple's financial camaraderie includes a $20 billion PART. Why? Because Google's search engine is the iPhone's default option, a deal that could face pressure if the antitrust spotlight starts shining too brightly. While Apple's saying, "But we like our users' privacy and security," the CMA is planning to take a cold, hard look before March to decide on any action. In the meantime, the only fallout is that cloud gaming concern has been pacified, for all you joystick warriors out there. To recap, Google's navigating turbulent waters with DOJ antitrust pressures threatening to pull apart the Chrome ship. Alphabet sprinkled with breakup speculation confetti, and UK's probing browser duopoly like a detective in Sherlock's shadow. Will they triumph like a tech Houdini, or find themselves in regulatory lockup? Only time will reveal the tale. Stay tuned and trade smart. Hold on to your helmets, tech enthusiasts. Palantir Technologies is making headlines like a rock star in the tech stock arena today, and I'm here to give you the snazzy lowdown. To kick things off, Palantir is shifting its javelin from the NYSE to the Nasdaq Global Select Market come November 26th. This move has investors buzzing about possible growing pains and opportunities, especially with murmurs about Palantir potentially joining the Nasdaq 100. Yes, that illustrious club might soon have a new member with the sort of mysterious allure Palantir promises. Now, why should you, the savvy investor, care? First up, ETFs, or exchange-traded funds, have a thing for Palantir. It's like hitting the investment jackpot at Vegas. For those trying to juggle their portfolios without a circus act, a few ETFs are eyeing Palantir as though it's the secret soda in a plain-spoken cooler. AIPI, SHLD, and RK have all taken fancy to PLTR because this company is steeped in the realms of AI, robotics, defense tech, and innovation. Talk about market exposure and liquidity? They're pretty much saying, we got you covered. AIPI, for instance, boasts of a 9.46% exposure to Palantir stock, whereas SHLD has staked out a cozy 7.82%. And not to be left behind, RK heats things up with nearly 5% exposure. These funds represent your VIP access passes to share in Palantir's potential roller coaster of growth. Now peel your eyes away from the ETFs and take a gander at Palantir's vibrant stock performance. Over the past month, it's seen a rocket jump of plus 40.9%, pretty noteworthy when compared to the Zacks S&P 500 Composite's steep toddler climb of 1.7%. How's that for a tech-friendly surprise? Part of this thrill stems from the anticipation of Palantir posting earnings of 0.11 cents per share for the current quarter, marking a sensational change of plus 37.5% from last year. Taking a longer view, analysts are predicting an annual earnings estimate shift of plus 52% from the prior year. So for those curious cat investors, these might be the cookie crumbs you need to follow. While the Zacks folks have labeled the stock with a number 3 rank, meaning the ride might be steadier but not wild as a circus, various valuation first-hand scores, a not-so-generous F, indicate Palantir may be darned overpriced compared to peers. So if Palantir were a contestant on a Who's Got the Nuts TV show, they'd be strutting out their earnings but shuffling on value. Whether you side-eye the market or dive headfirst, Palantir Technologies offers a landscape ripe with mystery and little gems for those daring enough to dig deeper. With its compelling mix of sectors and booming buzz, this company promises to keep the excitement alive, right from Wall Street to our everyday screens. Grab your popcorn, for if not the next big thing, Palantir is at least the current trending thing to behold. All right, techno enthusiasts, MicroStrategy is back in the spotlight today, and it's strutting down Wall Street like a runway model who's come to disrupt the telecom fashion crossover event of the century. First up, let's talk about the jaw-dropping boldness of MicroStrategy's share valuation. Our good friends at BitMEX crunched the numbers and shared a stat that's crazier than a tech conference with free Wi-Fi. MicroStrategy is trading at a mystical 256% premium compared to its Bitcoin holdings. Picture this. This company's stock is basically the tech world's version of those fashion sneakers that cost 3 times what they should, all because of brand cachet. MicroStrategy, headed by Bitcoin enthusiast Michael Saylor, isn't just dabbling in Bitcoin. It's practically trying to marry it. When you take stock of their massive hoard of 331,200 Bitcoins, valued at around $32.3 billion, with Bitcoin flirting around the $97,600 mark, the company sports an overall market cap that's currently resting at a jaw-breaking $115 billion. That's like buying a hot air balloon to take you 1 block to Starbucks, an over-the-top affectionate gesture for folks desperate to ride the Bitcoin breeze without directly buying the coin. Now let's fast forward to the thrilling roller coaster that is stock trading for MicroStrategy. After a reality-checking 16% nosedive on Thursday that might have echoed the dizzy downside of a Bitcoin conspiracy theory come true, MicroStrategy showed resilience with a sprightly 2.73% pre-market uptick earlier today. Is this just the Bitcoin rocket blasting off again? Or are investors softly singing Bob Dylan's "The Times They Are A-Changin'"? With a magnifying glass on the $100,000 Bitcoin dream, it's a Bitcoin sidecar riding ride. Furthermore, MicroStrategy lately wrapped up a no-interest convertible notes party, raising a staggering $3 billion. Seriously, my piggy bank just burped in comparative insignificance. Galaxy Digital's boss man Mike Novogratz threw in a cautionary note, suggesting this Bitcoin surge train might just pull back a little when the confetti from overly leveraged trading hits the fan. So what's this all about? It's about a mighty, roller coaster happy tech beast that continues to underpin its value on the mercurial highs of digital currency hopes and hullabaloo. But hey, thoughts? Are you on board with this Bitcoin adjacent strategy? Or do traditional tech models serve your investment whims better? Roll up those sleeves and toss your comments down below. Are we surfing on savvy highs or just another speculative bubble waiting to pop? You've heard my 2 cents, which are sequestered digitally, I assure you, but I want to hear yours. All right, let's dive into Palantir Technologies, the mysterious enigma of the tech stock world that stepped into the limelight today. Now, based on today's news, Palantir is making a splash by switching from the NYSE to the Nasdaq Global Select Market, with whispers about joining the Nasdaq 100. This signals potential increased visibility and possibly new capital streams from indexes. The buzz around Palantir's AI, robotics, and defense work makes it an appealing candidate for those looking in at innovation frontline companies. Given Palantir's impressive stock performance, with a thrilling 40.9% spike over the past month, while expectations are set high for a 37.5% increase in quarter-over-quarter earnings, these indicators suggest there's growth potential. Plus, the anticipation of a high annual earnings shift is a cherry on top. However, let's not forget the valuation side, where it carries a less than flattering F. It implies a potential overvaluation when compared to its peers, which can be a red flag if you're thinking long-term value rather than a growth play. So, if you ask me, should you buy, hold, or sell Palantir? I'm giving it a cautious buy recommendation if you're someone who thrives on excitement and isn't afraid of some roller-coastery turbulence. The growth potential appears enticing, but there's an inherent risk with valuation concerns. However, keep in mind, gals and pals, I'm just your hype-spilling virtual guide to insights. Always do your homework, tread through those financials like Sherlock on an investigation, and ensure it meshes with your investment strategy before making any moves. In today's tech whirlwind, ASML is bracing for a legal tussle while juggling a stock roller coaster influenced by fascinating options trading. Over at Google, the DOE antitrust drama pivots on whether breaking up the alphabet empire could spell a techno-monopoly shakeup, something the international spotlight is keenly watching. Palantir's pivot to Nasdaq has them poised for potential stardom in the tech sector, eyeing a Nasdaq 100 listing with impressive market jumps. Meanwhile, MicroStrategy is riding a Bitcoin blitz, attracting investors bewitched by its massive crypto cash despite the premium price tag. So there's your electrifying tech lowdown. Don't forget to tap that like button, subscribe, and toss this video around to others like brisk confetti. Join me again on Monday for your next dose of tech revelations, and have a stellar weekend, Tech Dynamos.